to record this webinar, and it will be made available afterwards. So with that, I would love to introduce Joanna.
Thank you, Michael. It's great to be here. Thank you all for coming today. So my name is Joanna Reiner Wilkinson, and I'm the Senior Financial and Education Associate at SMU Data Arts. So before we even get started with the webinar, I just want to acknowledge that we are in the middle of some challenging circumstances, both as individuals and in our roles at arts organizations. And I really miss being with you all in person, but I'm really glad to be able to connect with you remotely today. So here are those housekeeping issues. So just so you know, everyone's going to be on mute throughout the presentation just to minimize any background noise. And then take a moment. Many of us are used to using Zoom at this point, but if you're less familiar with Zoom, find both the chat feature and the Q&A feature. There are icons for both at the bottom of your screen. The chat is a great channel for any technical issues that you're having, and I encourage you to use the Q&A feature if you have questions about the webinar content. Michael is going to be monitoring both the chat and the Q&A throughout the webinar, and we have time at the end to answer as many questions as we can about the presentation. And then after the session, we're going to send you a follow-up email with some resources you can use, and we'll send you the slides for the presentation, and you're welcome to share any and all of these with your colleagues. Please note before we start that all of the information that I'm sharing today is intended for new organizations, unaudited organizations, organizations with small budgets, and really for folks who are less familiar or completely unfamiliar with nonprofit financial management. So the material I'm about to present is basic on purpose. Now, if you're not one of those people, you are more than welcome to stay, and I hope you'll be able to fill in a few gaps in your financial knowledge or think of a colleague who would benefit from watching a recording of this webinar in the future. So let's get started. Although your work revolves around creativity and culture, understanding how finances work is key to successfully managing your day-to-day activities and planning for your organization's future. You need to know things like, how do you record all of the personal contributions you make to your organization or project? How much will it cost if you offer 3 programs next year instead of the usual 2? Or how much should you charge for online programs? And if you make payments optional for those programs, will you make enough to cover your costs? Or does your organization look attractive to donors and grant makers? Financial data can help you answer questions like these and provide insight to help you make effective decisions. And there are multiple ways that data is used for financial management, ranging from how you keep track of the data in the first place to the various reports that your board reviews at every meeting. We like to think of these different ways of using financial data as building blocks for financial health, tools, methods, and best practices you can use to help get your organization on solid financial footing and stay there. And today's session will focus on an important building block, the annual budget process. Before we jump into that, however, I just want to take a moment to share a brief overview of our organization. SMU Data Arts is a program of the Meadows School of the Arts at Southern Methodist University, and here you can see a little bit about what we do. We build capacity for data use in the sector. We collect high-quality longitudinal data on the sector. We develop data collection methods to respond to evolving sector needs, and we provide insights from the data that people can use. So here are our goals for the next hour. By the end of the session, I hope you will understand the importance of creating an annual budget, know how to create and use a budget template and then add numbers to your budget, know how to analyze a budget and make mid-year course corrections, and finally, leave with some additional resources on these topics that you can explore with staff and with board members. So before I jump into the content, I would be remiss if I didn't talk about the COVID-19 pandemic and how it's affecting our lives, our work, and our sector. There is still so much to learn about the full impact that COVID-19 will have on our lives and the lives of those around us. And we stand in solidarity with arts organizations and their employees and artists as things continue to unfold. SMU Data Arts is monitoring the impact of COVID-19 and working continually to gather information and share resources and advocate for the sector during this challenging time. And we highly encourage you to review our resources page. The URL is on your screen here, and stay engaged with us by reading our newsletters and follow SMU Data Arts on any of our social media platforms and learn how we're gathering and using data from arts organizations like yours so we can share how the pandemic is affecting our work and our sector as a whole right now. And one more thing before we get started, I want to thank all of you for filling out the survey that was attached to the registration form. It was really useful for me to know where all of you are on the continuum of budgeting knowledge and what you're hoping to learn today. But just to manage expectations a tiny bit, while I would love to give you an hour-long workshop that covers everything budget related that you need, it's just not possible. So instead, let's think of this webinar as the beginning or an early stage on your financial journey or the start of a conversation about budgeting. And I'm happy to continue having this conversation with you even after the webinar is over. You all come to this workshop with different roles at your organizations, different missions, different capacities, but with few exceptions, no matter what your role is at your organization, your job most likely intersects in some way with your organization's finances. You might be a fundraiser, or you might be a person who does all of the financial data entry, or you might be a program manager who looks at financial reports on a regular basis, or you might be running a one-person shop and doing everything. No matter what your role, because your work touches on finances in some way, the overarching goal of this and many data arts workshops is to help you understand and embrace financial data and financial processes. So let's get started with our building blocks, talking about budgeting basics. Now, I'm going to take a wild leap here and guess that we all know what a budget is. It's a short-term financial plan which lists money coming in and how much everything you need or everything you want to spend money on will cost. And it always has a bottom line or your projected surplus or deficit for the year. And in theory, we know we're supposed to make and follow an annual budget at work, but you may have never really learned how budgets work or how to make one. This happens all the time in nonprofits where we come in with a passion for our missions, but maybe little business experience. And sometimes we're even a little embarrassed about our lack of business knowledge or financial skills, and we don't even know what questions to ask or how to begin. And so that's why we're starting at the very beginning with the basics of the budgeting process. And though there are different types and different levels of budgets, we're going to focus mainly on your annual organizational budget, which covers the time frame of your 12-month fiscal year. But first, why do we even need to make a budget anyway? Here are just a couple of the reasons why. First, knowing that you have to put a dollar value on something forces you to examine all aspects of your projects, your programs, or your organization as a whole. It's a great moment to take stock of the financial impact of everyone you employ, everything you have, and everything that you do. And actually writing down all of the money that's coming in and all of your regular expenditures and then calculating that bottom line or surplus deficit can give you peace of mind that you will be able to pay your bills or highlight moments of shortfall that you need to prepare for. Crafting a budget is a great time to think about goals for your organization, long-term or short-term goals, and then work out how to make those goals financially possible. And one more, writing out a budget and then monthly or quarterly, and certainly at the end of the year, comparing your budgeted numbers to your actual numbers gives you great information to help you plan for future years and monitor your progress toward achieving your goals and help you course correct if necessary. Now, I said a second ago that a budget is a financial plan. Plan is the key word here. Budgets contain projected numbers only. How much you think you're going to spend or how much you think you're going to receive. This is different from a financial statement or a financial report, which contains actual information about how much you actually spent and how much actually came in the door. I emphasize this because language is important. And I know you know this, but when you're reporting to donors and grantors about how your year went, you always use actual information. When you're telling grantors or other supporters about plans, project plans, the financial aspect of organizational goals, that's when you use a budget. Because a budget is a plan, to be ready to carry out your plan, your budget for the next fiscal year should be finalized before the end of your current fiscal year. And ideally, you'll start preparing your budget for the next year around 2 to 3 months before the end of the previous fiscal year. So that's after your organization has thought about or set specific goals for the year ahead. So if your fiscal year ends on June 30th, you might begin working on the budget in early April to give you time to review and make revisions and then have the budget approved by the full board before the end of the fiscal year. And I know this sounds obvious, but the larger your organization is, the more departments, the more programs you have, the more moving parts there are in your budget process, the longer budgeting will take. So do plan accordingly for that. Why do you need so long to make a budget? As you'll see in a moment, you may need several iterations of the budget. You may need to do some research, some brainstorming, have review sessions with your board or finance committee to make sure you can achieve all of your programmatic and financial goals. So leave yourself plenty of time so you can create a great financial roadmap for your organization. So how do you actually make a budget for your organization? Strange but true, creating a budget doesn't actually start with numbers. It actually starts with a list of items or a budget template. I don't know if you're like this, but I'm a list maker. So I make a shopping list before I go to the grocery store every time. If I don't make a list, I inevitably forget something and dinner might be different from how I planned it. Budgeting at work is the same way. Start with a broad list of everything that goes on at your organization, all of your programs, all of the ways that money comes in the door, all of the things you spend money on, all the people you pay or wish you could pay to do something. And then add details, as many as you can think of for each item. Ask everyone at your organization for help with this part so you don't forget anything. Notice with this example list that there are some items that seem similar to each other. So the next step is to wrangle all of these items, combine similar items, review, and overall organize items because, like any list, a budget is easier to use when it's well organized. So let's think about our shopping list parallel for the moment. One thing I notice about my shopping lists in particular is that when I make them, I just write things down as I think about them. They're in no particular order. And then what happens inevitably every time is I go to the store and I constantly have to check and recheck my random list to make sure I haven't forgotten anything. And then there's this moment, I'm about 3/4 of the way through my shopping experience. I think I'm almost done, but then I have to go all the way back to the other side of the store to get something because it was just in a different place on my list. But if I actually take a few moments and organize my shopping list before I go to the store so that all of the vegetables are in the same place, all of the dairy, the baking, et cetera, and so forth, then I can actually get through the store without backtracking. This is the same concept for budgeting. Once you have your detailed list of activities, the next step is putting like with like. These lines and these categories become the foundation for your budget. Okay, one more shopping list parallel. I often find myself grocery shopping after a full day of work. And at that moment, even if I have a list in hand, I can't remember all of the things that I need. I know I've forgotten something and I just can't remember what it is. And I'm not sure if I'm going to get all the things I even need for dinner that night, let alone for the rest of the week. But luckily for me, The internet is full of grocery lists, just like this on your screen. And all I have to do is find one that suits, or you can make a similar list for yourself in Excel and then customize it with all the things you like to shop for. And then every time you need to shop, you just print out your custom list or tear a page off a pad, check off some boxes, and you're all set. The same thing is true for budgets. There are lots and lots of nonprofit budget templates out there. And what I like about them is that they are a starting point. They're not necessarily the right set of lines for your organization, but they're a long list that you can add to and modify and take things away and change until you hit on the list that's right for you and your organization. And after this webinar, one of the resources that I'll point you to has a template that you can use as a starting point and modify from there. Whether you make your own list of revenue and expense areas or start with a ready-made template, the result is one that everyone at your organization should use, whether they are creating a departmental budget, a project budget for a grant, or a budget for the whole organization. And it's one you should use every year at budget time. Once you have your list or your template ready, then and only then is it time to bring money into the picture and start adding dollar amounts. So let's think about how we do that. So first, if yours is a multi-person organization, even if some of those people are volunteers or board members, get them involved in the process. Spread the work of budgeting out among staff or board members who are most familiar with key areas of the organization. This will help you get better information, feedback, ideas, buy-in, and it will encourage dialogue about what should happen at your organization next year and set up some kind of accountability for achieving budget goals. So give everyone a copy of your master template and then assign them areas of the organization to work on, whether it's their project, their department, have them fill in the template. Everyone using the same template, even if they have to leave lines that don't apply to them blank, ensures that you will be able to collate the information easily and use everyone's information to make the organizational budget. So for each line, whether it's revenue or expense, enter the amount you think you will receive or the amount you will spend in your next fiscal year, and always jot down some notes or some assumptions that led to those numbers. If you have a budget from last year, before you add in any numbers for next year, review last year's budget and your most recent financial results for each revenue and expense lines. So compare each budgeted line to your actual financial results to date and record the difference between the two. This is called variance analysis. As you go through each line and note where there are differences or variances, make sure you understand why the budgeted numbers are different from the actual numbers. And there may be differences for lots of reasons, like your fiscal year isn't over yet and you still expect to spend or receive money, or something didn't happen that you thought would happen. Maybe you expected a program to bring in 100 paying attendees and it only brought in 50 paying attendees. Or maybe something unexpected happened that led to variances, like maybe there was a pandemic or something like that. So let's go through a little example here. Here's an example using expenses. If you budgeted to spend $100 on program expenses, but actually spent $200 on program expenses, the variance or the difference between those two numbers is negative $100. So you spent $100 more than you thought you would. Here's the analysis part. Did you spend more money because you forgot to budget for some of the supplies you needed? Or maybe you spent money because prices were higher than you anticipated. Or maybe you spent more money because you thought you were going to offer a program 3 times, but you actually ended up doing it 6 times. So you needed twice as many supplies as you originally thought. Going through this exercise of understanding each variance will help you not only understand what happened last year, but also help you think about whether those circumstances apply to the next year. And ultimately, it will help you decide what amount goes into your budget in the end. If your organization didn't have a budget last year, or if you've done something like add a new program or a new line to your budget template, and you don't have prior year information to guide you, rather than even making educated guesses about the numbers to add to the lines in question, do some homework or do some research to help you put in a budget figure. So let's say, for example, that your organization plans to produce a one-woman show, and it can be done online or in person. So it's a good option to put in your plan for next year. Right now, you see on your screen, there's a budget figure in there for $10,000. Where did that number come from? Well, I made it up, of course. In a perfect world, before you add a number like that, you would have a conversation with the performer and have a negotiated amount to include, or at least you will have decided internally that that's the maximum amount you can pay anyone for the performance. If you don't have information that precise, take some time to talk to colleagues who have had similar programs and ask how much they've paid performers, anything along those lines. Doing this kind of homework does take more time, but it will result in a more accurate budget for you to use going forward. And just as a reminder, especially for new items, do make sure to jot down those notes and assumptions so you can always have a paper trail and remember how you arrived at those numbers later on. If your organization doesn't actually change very much from year to year in terms of staff and programming, beginning with last year's budget, doing some kind of variance analysis, and then making some small changes based on that analysis to come up with your new budget figures may be all that you need to do. That's called incremental budgeting. But the reality is that most of our organizations do change every year, in big ways or in small ways, or there are ways that we want it to change or goals that we want to achieve. Each of these changes or goals has an impact on your budget. So, for example, maybe your board has given you the directive to achieve at least a $10,000 surplus next year so that you can have a cushion against future emergencies, like, say, a pandemic. Before you can make any adjustments to your budget, you need to have discussions with your board and with staff about how you're going to achieve that goal, maybe through fundraising or increased earned revenue, decreased expenses, or all three, and then adjust whatever detail lines you need to on your budget. Or maybe you've applied for and received a grant to fund your goal of expanding the online classes you offer beyond regular business hours to evenings and weekends. This means making changes to several budget lines. So on the revenue side of your budget, you need to include that grant revenue and any additional tuition fees you expect to receive. On the expense side, you need to do a little bit of math and maybe a little research to figure out how to adjust the expense lines in your budget. You might need to figure out how much will you have to pay staff to teach the additional classes? Do you need any additional supplies for these new classes that you're going to add? And do you have enough hours in your online meeting account to cover these additional classes, or do you need to upgrade? Once you have answers to all of these questions, you can fill in or adjust your budget lines accordingly, and that goes a long way toward creating a budget that is really going to help you meet a goal that you have. Now, another budgeting method is called zero-based budgeting, which is tantamount to a fresh start every year. What does that mean? So, for example, if last year you have a couple of different programs, but you spent 75% of your program budget on program A and 25% of your program budget on program B, the zero-based budgeting method doesn't assume you will have that same split of expenditures in the next year, but that you'll build a new program budget from scratch, thinking about your goals and plans for each program in the next year, your program priorities, connection to mission, anything new you want to add. Last year's results may inform this year's budget, but each line and expense and percentage needs to be considered, especially in light of revenue expectations. So I just broadly outlined three budgeting methods, three techniques: incremental budgeting, which is making small changes to line items based on variance analysis; goal-based budgeting; and zero-based budgeting, as if these were three completely separate methods and you just have to choose one way of doing things. But in reality, most organizations create their own hybrid model of all three of these in the way that works best for them. And there's no hard and fast rule for what's right, no one true way to budget. But once you hit on a solution that works for your organization, the key is to use it consistently from year to year. And no matter what method you use to enter numbers, rarely is budgeting ever done in one round. The next crucial step is review and analysis, because once you have your first set of numbers in, you need to consider things like, does this budget actually meet your program goals, your departmental goals, your organizational goals? And if it doesn't, what numbers do you need to adjust, or do you need to adjust your goals? You also need to think about whether the numbers are plausible and accurate. So, for example, if your budget projects a $50,000 deficit, before you adjust your budget and simply add $50,000 to your individual donations line so that you can break even, check your records first. If your donation history says that you typically get around $5,000 from individual donors, suddenly getting $50,000 is unlikely, and you might be better off reducing expenses instead. Finally, think about whether you have the capacity to achieve the budget you create with the resources you have right now and have budgeted for. Do you actually have the staff, the equipment, and space you need to do everything? Or is maybe something else missing from your budget that you didn't think about? As you're doing your review, highlight items that you think are likely to happen but are unconfirmed, or put on your prognostication hat and think in big picture terms about any kind of situation that might affect your whole organization. Now, these things could be anything from a grant you thought was a sure thing that maybe might not come through, or it might be something positive like an effective COVID-19 vaccine enabling a return to regular programming mid-year. These sorts of events going one way or another might have a big impact on your organization. So to be ready, whatever happens, you might want to prepare several scenarios and play out each eventuality. And then for your final budget, you want to choose the one that you think is most likely for the final, but just in case things don't go the way you think they're going to, you'll be ready with a backup plan with one of these other budget scenarios. And then just to reiterate this step, once you've done a complete review of your budget, you've made any changes that you needed to, you decided between scenarios, make sure the board reviews and approves the final budget, because this will become the basis for monitoring your results throughout the year. So once your budget is approved and you consider it final, your new year begins. Set up some kind of process for regularly monitoring your budget against your actual results to see how you're doing. Ideally, you'll do this on a monthly basis. So to make this work, your financial statements, whether you use Excel, QuickBooks, or any other kind of accounting software, must use the same lines as your budget template. This is really key. And every month, just do the same kind of variance analysis that we talked about earlier. Compare budget to actual and make sure you understand the variances. Some of the variances will just be timing issues. Something hasn't happened yet, but it will. Or maybe because your budget has annual amounts in it and you only incur expenses 1 month at a time. These things are perfectly normal variances, and they're not ones you really need to worry about. Some variances are just small changes from what you expected. This is also very typical, especially since we tend to use round numbers in a budget. But some variances are significant and they will have an impact across your organization, and they may even require budget changes. So let's talk about that for a second. If your variance analysis uncovers significant divergence from your budget, you may choose to watch something for a month or two. But if the variances are large enough and persistent, it may be time to actually change your budget. So if the variances you identified are due to one of those likely but unconfirmed events, maybe you already have another budget scenario that you previously worked on, and you can just move from one scenario to another. That's the easiest situation. But we know, especially from this year, 2020, that that doesn't happen all the time. So what if we have another year like this one that we've had? Another pandemic year where something happened completely unexpected to many of us. We had to close our doors for a while. Now what? I'm sure some of you, many of you, maybe all of you went through this process at the start of the pandemic and know it better than I do. But when this kind of drastic event happens, or if your variance analysis shows that you're just on a new path and there's no way to get back on the course that you originally intended before the year started, that's when it's time for a mid-year rebudget or reforecast procedure. So let's talk about how that works. So you start with your year-to-date actual figures. If you actually know that the event we're talking about is big enough to warrant a reforecast, we're going to keep talking about the pandemic here, obviously. You don't even need to do a lot of variance analysis. You already know in advance that things have to change, so you just have to move forward with those changes. The next step is jot down some notes about your new assumptions, your new goals, just like you did with the budget. If you have a multi-person staff or a board that takes on some of the organization's work, get folks involved in the conversation so you consider all aspects of your organization. So you consider which programs will remain unchanged, which will have to go, which will need modifications. How will changes in programs affect revenues and expenses? Which expenses disappear if staff are working from home? Which will stay the same? How do these changes intersect with your organization's overall goals? And how will those overall goals need changing? Once you have a new set of assumptions, you've thought through all of the aspects, just as we outlined earlier in the initial budget process, that's the moment to start adding new numbers. Once all of your numbers are in, then you do some kind of review and analysis. So look at your surplus deficit calculation. Is it positive or is it negative? Are your new numbers realistic? Do you need to make more changes or create new scenarios to cover various alternatives? And once you have a new set of budget numbers, make sure the board understands and approves all of these changes. Now, before we wrap up all of this conversation about budgets, we've covered the whole budget cycle at this point, from creation to analysis to mid-year correction. I do want to mention a few other budgeting ideas and best practices. So, depending on the size and complexity of your organization, you may need different levels of budget. A program budget for each of your organization's programs, a project budget, which may incorporate several programs, as well as the whole organizational budget. All of these program and project and detail budgets should use the same line items as the organizational budget. And if you need or want more details on a program or project budget, make sure they roll up to a line in the main budget. The typical way to make a program or project budget is to simply add a column for each program to match the main organizational budget. So you use the same template and you add as many columns as you need to. Looking at a budget in this way can also help you allocate some of the organizational expenses to various programs if you need to. And even though an annual budget covers an entire fiscal year, to help you with variance analysis, especially if you do it on a monthly basis, it's actually a very useful exercise to create a monthly budget in addition to the annual budget. Making a monthly budget can help you figure out your needs in any given month and is really key to helping you think about cash flow. For example, if your expenses are about the same every month, you have your rent, your salaries, insurance payments, etc., but your revenue comes in infusions several times a year, but not every single month. If you know when your revenue is coming in, you can estimate how long you need it to last to cover your expected expenses and whether you'll have money left over for maybe one-time expenses like program supplies or independent contractor fees. So before we summarize all of this budget information, I just want to acknowledge that with all these lines and columns I'm proposing, a simple budget document for your small organization or project is suddenly sounding really complicated and possibly overwhelming. So please just remember a few things. You get to decide how your budget looks. If you're new to the formal budgeting process, you may not want to or need to have more than a single column for an annual revenue or expense numbers for each line. But if adding more detail sounds like a good idea and you just can't do it right now for next year, just keep these ideas in a place where you can find them later and just plan to add a little bit more detail to your budget every year over the next several years until you get all of the detail you really want. But just know that the more detail you add to your budget up front, whether it's program columns or budgeting by month or any of those things, the more you can learn from your financial information later on. So what are the key takeaways for the annual budget process? First and foremost, leave time for the process. Start your budget for next year 2 to 3 months before the end of the current year so that you have the time you need for your research, for more than one revision before you get to the final product. Make sure to set some goals for next year and build your budget thinking about what you need to do and spend to achieve those goals. Get your staff involved. Have staff members work on the budget for their area or at least work with you. Give them a template to work with so you know it will fit seamlessly into the main organizational budget, and then work with them as you make revisions so that their program budget and they know what they have to work with or they know what their overall revenue goals will be. Get board approval for your budget. The board is responsible for setting the direction of the organization, and approving the annual budget is part of their fiduciary responsibilities. Make sure to do this monthly variance analysis so that you have early warning that changes are afoot or that course correction may be necessary. Know that it's okay to make mid-year revisions to your budget. Some years, like this year, don't go as planned. So if you know that big changes are necessary, and again, there's no way you can get back to your original course, it's time to make a new budget and do some big revisions. And finally, remember that a budget is a plan. It's not a guarantee of what will happen next year or how much something will cost. It's always a jumping off point. So before we go, I do want to share with you a few data arts tools and resources that offer you different ways to work with and gain insight into your financial data. First, if you don't already do so, and I think most of you do, fill out a cultural data profile, or CDP. This survey is based on your final financial statements. And once you do the data entry, which is only once per year, your data can be a part of grant applications for participating grant makers like MCC, and the research reports we offer give you insight into the national arts and culture scene. Once you've entered 1 year of data, you have access to a full suite of reports that help you analyze your trends in a number of areas and benchmark your organization to others. These reports also allow you to have ready-made data and visuals grouped around specific topic areas for your board meetings. And we have a couple of other tools to help you analyze your data once it's entered. We have something called the Kippy dashboard, which is a great conversation starter about all of the intangible things that contribute to your organization's success. And we have a projections tool, which is designed to help you with your financial planning by using your historic data to help you play out different scenarios when you're doing your planning or your budgeting. If you want to learn more about using data in general, we've also developed a series of online free courses meant to help you learn to use your data effectively. There are 4 courses currently available, and they cover specifics of how data can be useful in different areas, such as using data for decision making, financial data essentials, using data to build relationships with your audience and with donors, and using data as part of your advocacy work. Data Arts also regularly publishes white papers, and one of our most recent papers is called The Alchemy of High-Performing Arts Organizations, and this was published in partnership with the Wallace Foundation. This research studies 10 organizations with a track record of high performance and 10 organizations who actually engineered a turnaround from low to high performance. Their successful strategies can be considered for replication by your organization. When the report launched, we held a community conversation with 3 arts leaders who were interviewed as part of this research to gather their individual insights and learn how the COVID-19 pandemic impacted their organization. It was a great presentation, and if you'd like to watch the recording, on your screen is a link to the video. And finally, we also have a number of other online videos available on our Vimeo page. And this includes excerpts of content from our data literacy courses, recordings of some of our training webinars, and videos about how to use our platform. So with that, I'm going to stop talking for a bit, and I'm going to ask Michael if there are any questions. I saw some things pop in as we were going along.
Sure. Thank you so much, Joanna, for this overview. And this is our opportunity now to ask some questions to Joanna. We have about 15 minutes that we've allocated for this section. So as you're thinking of your questions, please put them in the Q&A box, and I will organize them and send them to Joanna. As you're thinking of them, I did want to kind of foreshadow a little bit. This is actually the first webinar in a series of 3 that we've designed with our friends over at Data Arts and Joanna in particular. Today is all about budgeting basics, as you can tell. We've got another great webinar on December 16th at 3 o'clock, and we'll send you, since you've registered, you're on the system now, so we'll send you when you can register for these, but it's on December 16th, and we're going to be talking about building your chart of accounts. We're really getting nerdy in this world. Sometimes it's been a while since you've looked at those chart of accounts, and they don't really reflect your programs or your work as it is right now. So we're going to visit that a bit. And then in January 13th, also at 3 o'clock, we're going to be looking at a special section for our board members, looking at that balance sheet and scenario planning, some of the work that our board members need to be looking at. Some of our conversations that we've had with organizations throughout the summer and the fall is that sometimes when there was a crisis like we're still in, some board members may not be able to be helpful in reading financial statements and being able to ask the types of questions that are important to set policy and direction for the organizations in times of crisis. So that one will be all focused on board members. In addition to all of this, in the spring, The Mass Cultural Council is going to be presenting over 40 different webinars from multiple consultants and multiple resources on topics on financial management, marketing, development, human resources, board, and management and governance. We just put out an RFP. We've heard what you need for the to get through the current crisis, and so we put that into action and actually created an RFP where we had a lot of folks coming to us to help you. So all of that will be coming out soon. Everything we do is free, and everything we do here is available to any nonprofit in Massachusetts. It doesn't have to be a grantee of Mass Cultural Council. We really feel very importantly that this intellectual capital and our services are sent to the broadest audience that we have. So that will be coming out very soon. So look for a press release on that. All right, Joanna. So we do have a few questions. Our first question is, in zero-based budgeting, is
Mhm.
that assuming that one of the programs is not taking place?
It could, absolutely. So there's no rule about what is or is not zero-based budgeting, but the idea is that you don't just say, oh, let's just increase everything by 5% and move along. It's a moment to actually reevaluate all of your programs. Like maybe you take a look at your programs and say, this program in particular is not attracting a lot of people. So we're still going to do it, but maybe we're not going to put as many resources behind it while we take a step back and reevaluate. It's just that kind of thing. Or it could be, you know what, we're just not going to do some of our programs at all. So zero-based budgeting could be any and all of those things.
Great. We have another question here. If funding for a project is coming from savings, it's set aside for the project from a previous year,
Mhm.
how and where is this shown in a budget?
Oh, this is a very good question. There's lots of things like these kind of timing issues, like money has come in the previous year, but it's considered restricted and it has to be released from your budget so you can use it. So I think it's important to keep track of that. And what I like to do when I'm thinking about a budget, I'm thinking about it in unrestricted terms. So you do put that revenue in there in your budget because finally you can use it to fund all of your programs. So if you're used to looking at financial statements and audit, and they have those restriction columns, think of your budget as the unrestricted column or the prospective unrestricted column, and do put the revenue in there, even if it came in a previous year. It'll be treated differently in accounting terms, but in your budget, definitely put that in. Great question. We could talk about timing problems forever, I think.
Great. We have a next question. What happens if you end up having a deficit instead of a surplus? What can you do to resolve the deficit?
Oh, that's another very important question. So it used to be for nonprofits, people thought showing a deficit is a good thing because we don't want to show a profit. We're a nonprofit. Not so anymore. But things still happen. Sometimes when we're showing a deficit, if you look at a financial statement, whether it's an audit or your QuickBooks statement, you're showing a deficit. Sometimes that is one of those timing issues that I just talked about. It's because you had the money in a previous year. So if you're showing a deficit, one of the first things you want to do is take a look at your organization's balance sheet or your cash balance. See, do you have the money already in hand that can absorb that deficit? Because that'll give you this immediate peace of mind that, okay, we're going to lose money in this particular year, but we have savings from last year, a reserve, working capital, lots of different ways to think of that savings that you have to actually fund it. And so you have a cushion. That's going to be okay. Another thing to think about is look at your trends from the past few years. Have you been showing a deficit for a while? Right? Is this a trend? Because if it is, you're in some kind of hole and you need to actually step back and take a look very carefully at your organization, specifically your financial data, to figure out how did it get to be that way? Are you expecting to get money from donors because people always give money to your organization and they've just stopped for one reason or another? or it could be lots of different varieties. So how do you reverse a deficit? You have to very careful examination and analysis of how it got that way. Are you spending too much on your programs? Do you have too many programs? Are you not reaching the audience you want to reach? Do you not have the right variety of programs? Because sometimes we have programs that are money makers and they fund other programs that we know are going to lose money, but they're programs you want to do because they're really true to your mission. So you have to do a big analysis of your organization to figure out how the deficit got to be there and what are small things you can do to start reversing that trend. And often you can't do it in a single year. It takes years to do it. And so we talk about this budget process, which we've just talked about, and that is just the beginning of a long range plan, which can cover several years, like 3 to 5 years, which can help you plan to reverse a deficit over years. So it can be very complicated and it can take time.
Great. There's one question here. I think it relates to a project budget and forming
Mhm.
a project-based budget. How do you look at the previous year in order to inform the results that you will put together for a budget? I think this person is maybe getting ready to write a grant
Mhm.
and wanting to show the history of this particular project. And so, how do you use previous years to inform your current budgeting process?
Yes, and I think this is a good preview for some of what we'll be talking about in our workshop next month, where I talk about a chart of accounts, which is really the the accounting software version of this budget template that we've been talking about. Hopefully, somewhere in the way you are accounting for expenses, when money is entered into your accounting software, you have a way of coding it to a particular project. Ideally, that's what you'll do. And if you have done that, and in QuickBooks, if you have that, they have a project feature, or you can use classes, or if you have a sophisticated chart of accounts numbering system, you can use a segment of your chart of accounts code that's for a particular project. If you have any and all of those situations, you can actually generate a report from your accounting software for just that particular project or class or account code segment. And that can tell you what all of your expenses were for that program or project. Unfortunately, if you have not done such a thing in the past, you may have to do some more manual examination. So you know what the project is, right? So go through your records and think, okay, that was an expense for this project. It's tedious to do it by hand, and I hate that. But sometimes if you have not accounted for things very carefully because you just don't have the system set up yet, that's what you might have to do. Or hopefully you also have some paper files. Some of us still have paper files, which may have some receipts or documents, or even an electronic file, which has any and all of those things, that where you've gathered some project information and expenditures. But stay tuned for next month, because we are going to talk about this idea of tracking things like that in your accounting software to make it easier for you when you have to produce reports for grant makers.
Great. Thank you, Joanna. I think that pretty much cleared out all of our questions today.
Great.
As we said before, we will have a recording of this available on the Mass Cultural Council's YouTube channel. We will have a copy of this presentation as well. I think there was a request for some of the links in there. Yes, we will be sending that when both the recording is available and the slide deck. Since you've registered, we have your email address, and that's just great. Unless there's any final questions, thank you so much, Joanna, for delivering this back to basics webinar with us. And as we move forward with the Mass Cultural Council, we want to thank all of our participants today for taking an evening here on Thursday and joining us to talk a little financial nerdism, which we love to do from time to time. With that in mind, I want to wish you a very safe and healthy Thanksgiving break. And we'll see you soon at our next webinar. Thank you
Great.
so much.
Thanks, Michael.